Hi everyone, how's it going? Just want to do a quick breakdown of a potential trade idea which would have been a good example of how smart money traders could have been induced into the market at the incorrect time. So this was something that we spotted whilst doing our live trading session during London Open this morning. And what we can see here is, so the point of interest that we were looking at, let's have a look on the 15. I think it's a bit clearer on the 15 minute. So we've got this zone just here. So let's just break this area down. So we've got this last buy candle before the push, okay, and then it was this buy range before the push that then broke the structure. So we have this bit of structure here, which we were seeing as a liquidity area. As you can see, price has already cleared that. Now, it was this candle here that we were looking at a potential entry. So, let's just mark this zone out as our supply zone. So it's around here where it gets a little bit interesting. Now, what we're going to do, we're going to drop to the 1 minute time frame, and we are going to have a look and break down what was going on within here. Just give you an example of how some smart money traders would have been induced into the market early and how they would have lost in this example. Not saying every smart money trader, alright, there's a lot of people out there that are a little bit more wary of things like this, but we shall break this down. So, here we have, let's mark this up, we've got our 15 minute zone. So we've got our 15 minute supply zone here. So we've had our first mitigation, we've had a push in, we've then had a pullback, we then pushed up, okay, and then we've had a deeper mitigation, and at this point this is where a lot of people would have been looking to take a short. Now we've had a pullback, we haven't really had a clear break of structure, but as we've pulled back here we then started to create some of these lows here. Alright, so we've pulled back, we've had a push up, this high is then pushed down, broken past these lows just here. Okay, and then we've created these lows which is formed by this wick. Now as we've pushed back up, we then created another high, alright, so this is the high we're now going to be focusing on, and then we've got two inside bars. Alright, now let's mark out, so you could look at you could either look at the entire buy before the sell, or you could refine it to the inside bar. Either way, doesn't really matter. Now once we've had this low broken here, so we've got a zone here, we've had a low broken. Okay, so it's not very significant, but we've still had a break of structure, and it's still an area where we could have some smart money traders looking to take a sell from. Now, depending on your risk appetite, you could have taken a trade from the edge of the supply zone or the center. I personally like to take it from the center when the supply demand zone is larger than 1.5 pips. Okay, but this one's 5 pips, so I probably would have been looking for a trade within the center. However, what we had going on, as we've had this mitigation of the 15-minute supply, we haven't really had an impulsive movement. Okay, so this is where some traders would have been looking to get into the first mitigation or the first break of structure after the higher time frame mitigation. All right, and as you can see here, now if you had been a bit aggressive, had your stop loss set to break even quite soon, then you may have hit break even. If you hadn't, you would have hit stop loss potentially around here, depending on how high your stop loss is. And eventually, as you can see, price just pushed all the way back up. Now what's going on here is a liquidity grab. So let's just mark this up here. LG, liquidity grab. Okay, and then let's have a little look further where we might have been able to find a much better entry. So on the 1 minute time frame, we can see that price action it's not optimal. Okay, so we've had this push up, we've had a liquidity grab. As you can see, we've got quite a strong rejection wick here after it swept liquidity from the highs of this zone here. We've had a pullback, we've respected this demand zone here, so let's move this out of the way and let's start marking up what has been going on. So we've got this zone here. Now I'm going to put a little tick there. So this is showing that this area has been mitigated. So far, this demand zone has been respected. Okay, we've had a push up, we've then come back down, and then we've invalidated this demand zone. So we've now pushed further down. So from here, mark this area as invalidated. Okay, so this demand or this area, this level is now invalidated. So we've had a push down, we've pulled back up. Now at this point, I was no longer on the charts. I was no longer looking at the looking for a potential trade. My trading hours for London Open is 8 till 10. Occasionally I might trade a little bit earlier than that, but 10 o'clock is my cut-off. I don't sit there, because I scalp, I don't sit there in front of the charts all day. If a setup doesn't arise within that time period, then that's me done. So, I can hear what you guys are saying. Oh, but this is all hindsight. Yes, it is. But this is just a trade example of where this would not have worked. Okay, and potentially we would have found a slightly better entry within here. Now, in order for this to get into this trade around here, as you can see, we have a price pull back up, and we are mitigating something within this wick here. Now, not everyone uses a seconds time frame. We do, not very often though. So what we're going to look at is where this wick here has come back up and we've had a tap into something here. So we're going to have a closer look at what is going on inside these wicks. So when we drop down, we can see this impulsive push has had an immediate push back down. Okay, we still cannot see what is going on here, so we've got a wick just here. So there's a little bit of price action within this that has got something to tell us. So we can't quite see it on the 30 seconds, so we drop down to the 15 seconds. As you can see, this wick here again, we can look across and we can see that it's mitigated an inside bar here. Now what we can start to further see from this area is how price action has pulled back from there. So we can see this mitigation. So this would have been a better entry for us to be getting into this trade. So what we've got going on, we've had this push up, we've had a pullback, and as we've had a pullback, we've then had this wick push up to rebalance price coming down, okay, grab some more orders, and then pull back down again. Now this little area here, as you can see, we've got some imbalance in price. However, this bearish momentum is likely going to pull price back up to our unmitigated zone here. So as we can see, price has pulled back and we've mitigated this inside bar just here, as you can see with this mitigation tick. So let's just highlight this area. Let's just draw out our supply zone and we can see where the mitigation has occurred. Now from here, if we were to take an entry off the edge of our supply zone, you would have been tapped in. So like I said earlier on, I like to take my entries on the center of a supply demand zone if it's wider than 1.5 pips. So as you can see in this example, I wouldn't have been tagged into this trade. It likely would have been a missed trade for me. So this is something that you can experiment with, whether you take your entries on the edge of your zones, the center of the zones. I know some people like to take it on the 25 or the 75% of their POIs. So see how you get on with that. Let me know in the comments if you use one or the other. So this obviously would have been a 15-second entry, and as we've established, if I was following the rules that I trade with, I would not have been in this trade. However, if your rules are slightly different, this is an example of where you probably would have been in this trade. Now, as you know, I like to scalp. Alright, so I usually have a set target of about 5R. Now, my target would have been just here, so let me just adjust that slightly. Okay, and that would have just been shy of this demand zone down on this low. Okay, now let's just go back to the 1 minute time frame. So as you can see, this demand zone here on the 1 minute, it would have been a mitigation within there that we'd be looking at. So we just advance price forward. As you can see, it took a little while to get there, alright, in terms of a scalp trade. However, it did get there in the end, and it would have hit take profit. Now, if you're more of a swing trader or an intraday trader, maybe, probably more of an intraday at this point, we could have had a target a bit further down, maybe towards this area down here. So currently on the 5-minute, we have a demand zone just down here. So if you were to hold this a lot longer, let's advance price forward, you can see if we did hit that target or have our target down at this the demand zone, we would have struck a risk to reward of roughly 20 to 21R. So hopefully you found this useful. Now, my whole point with this video is just to highlight that being impatient, trying to get into the very first setup that you see, may not always be the right method to go for. As you can see, this trade would have either hit break even or stop loss. Okay. Now, by being patient, we've waited for a liquidity grab. We've then had our mitigated zone on the seconds time frame. If you don't have access to the seconds time frame, then you would likely have been waiting for a better entry, maybe further along down the line, maybe further down here somewhere. Or failing that, if you are a SMC trader that utilizes just the wicks, we could have looked at just the wick, as you can see here on this candle. So when we look on the 15-second, let me just quickly show you this. So when we look on the 15-second, the area of interest, this inside bar just here. Okay, let's just move this out of the way. So this inside bar that we were looking at the trade entry or trade example on, okay, that is just the wick, is the wick of this 1 minute inside bar. So again, hope you found this useful. Let me know in the comments section below if you have, or if you already use some of these methods